Bitcoin. The very word evokes a sense of mystery, innovation, and for some, even trepidation. It represents a new frontier in the world of finance, a digital gold rush that has captivated the imagination of millions. Born in the aftermath of the 2008 financial crisis, Bitcoin emerged as a radical alternative to traditional financial systems. It was a response to the failures and mistrust in the established financial order. This decentralized digital currency, powered by blockchain technology, promised transparency, security, and freedom from the control of governments and financial institutions. It offered a new way to think about money and transactions. Over the years, Bitcoin has weathered storms of skepticism, volatility, and regulatory scrutiny. Yet it has emerged as a formidable force in the global financial landscape. Despite the ups and downs, it has continued to grow and evolve. Bitcoin's journey has been nothing short of remarkable. From its early days of being dismissed as a fad, it has proven its resilience and staying power. From its humble beginnings as an obscure digital experiment, it has evolved into a trillion-dollar asset class, capturing the attention of institutional investors, governments, and individuals alike. Its influence is undeniable. Its underlying technology, blockchain, has become a buzzword, with the potential to revolutionize industries beyond finance. From supply chains to healthcare, the applications are vast and varied. Yet, the question remains, is Bitcoin still a good investment in 2024? As we look to the future, the debate continues and the world watches closely. The year 2024 has been a roller coaster ride for Bitcoin, marked by periods of exhilarating highs and stomach-churning lows. The cryptocurrency market, known for its volatility, lived up to its reputation, leaving investors both ecstatic and anxious. Bitcoin's price, a barometer of market sentiment, has swung wildly, reacting to a confluence of events both within and beyond the cryptosphere. The year began with Bitcoin trading at around $30,000, still reeling from the aftershocks of the previous year's crypto winter. However, a sense of cautious optimism permeated the market as investors looked forward to key events that had the potential to reshape the Bitcoin landscape. The stage was set for another dramatic chapter in Bitcoin's history, one that would test the resolve of even the most seasoned investors. Two pivotal events in 2024 injected a potent dose of bullish sentiment into the Bitcoin market. The Bitcoin halving and the approval of spot Bitcoin ETFs. These two events were highly anticipated and closely watched by investors and analysts alike. These events, long anticipated by the crypto community, had a profound impact on Bitcoin's price trajectory and overall market dynamics. The excitement was palpable, with traders and enthusiasts buzzing about the potential for significant gains. The Bitcoin halving, a pre-programmed event that occurs approximately every 4 years, reduces the rate at which new Bitcoins are created. This mechanism is built into Bitcoin's code to ensure a controlled supply. This reduction in supply, often likened to a digital gold rush, has historically been a catalyst for price appreciation. Investors flock to Bitcoin, anticipating that the decreased supply will drive up prices. The halving in April 2024 was no exception, as Bitcoin's price surged in anticipation of increased scarcity. The market reacted strongly, with prices climbing steadily in the months leading up to the event. Adding fuel to the fire was the approval of the first spot Bitcoin ETFs in the United States earlier in the year. This was a monumental development for the crypto space. This landmark decision by regulators removed a significant barrier to entry for institutional investors who had long sought a regulated avenue to gain exposure to Bitcoin. The approval signaled a new era of legitimacy and acceptance for Bitcoin. The influx of institutional capital further propelled Bitcoin's price upward, signaling a growing acceptance of cryptocurrencies within traditional finance. This wave of new investment not only boosted prices but also increased confidence in the market's long-term potential. As Bitcoin's price soared to new heights, the opinions of experts and analysts became increasingly divided. Bulls, emboldened by the halving and ETF approvals, predicted a future where Bitcoin would reach astronomical valuations, becoming a dominant force in the global financial system. They pointed to Bitcoin's limited supply, growing adoption, and potential as a hedge against inflation as key drivers of its future growth. Bears, on the other hand, remained skeptical, cautioning that Bitcoin's volatile nature and lack of intrinsic value made it a speculative bubble prone to bursting. They argued that regulatory uncertainty, security concerns, and the emergence of central bank digital currencies posed significant threats to Bitcoin's long-term viability. The battle between bulls and bears played out in the media, on social media platforms, and in the halls of financial institutions, creating a climate of both excitement and apprehension. Section 5. The allure of rewards and the shadow of risks. Investing in Bitcoin, like any investment, involves a delicate balance between potential rewards and inherent risks. The allure of high returns, fueled by Bitcoin's historical price appreciation, has drawn millions of investors worldwide. The possibility of life-changing gains, often touted in anecdotal stories, is a powerful motivator. However, Bitcoin's volatile nature cannot be overstated. Its price can swing dramatically in short periods, leading to substantial gains or losses. This volatility stems from a multitude of factors, including market sentiment, regulatory news, technological advancements, and macroeconomic trends. Investing in Bitcoin requires a strong stomach for risk, a long-term perspective, and a deep understanding of the underlying technology and market dynamics. Section 6. Navigating the Bitcoin waters investment strategies. Navigating the volatile waters of Bitcoin investment requires a strategic approach, one that mitigates risks while maximizing potential returns. The unpredictable nature of Bitcoin's price movements can be daunting, but with the right strategies, investors can find opportunities for significant gains. Several investment strategies have emerged, each catering to different risk profiles and investment goals. Whether you are a conservative investor or someone with a higher risk tolerance, there is a strategy that can align with your financial objectives. Dollar cost averaging, a popular strategy for long-term investors, involves investing a fixed amount of money at regular intervals, regardless of the asset's price. This methodical approach can help investors avoid the pitfalls of trying to time the market. This approach helps to average out the cost of investment over time, reducing the impact of volatility. By spreading out purchases, investors can potentially lower their average cost per Bitcoin, making it a less stressful way to invest. Long-term holding, or hodling as it's known in the crypto community, is another popular strategy that involves buying and holding Bitcoin for extended periods, weathering short-term price fluctuations in anticipation of long-term growth. This strategy requires patience and a strong belief in the future value of Bitcoin. Diversification, a fundamental principle of investing, remains crucial in the Bitcoin space. By not putting all your eggs in one basket, you can protect your portfolio from the extreme volatility that Bitcoin can sometimes exhibit. Spreading investments across different asset classes, including stocks, bonds, real estate, and other cryptocurrencies, can help mitigate portfolio risk. This balanced approach ensures that even if one asset underperforms, others may perform well, providing overall stability to your investment portfolio. Section 7. Bitcoin's future uncertain yet promising. Predicting the future of Bitcoin is an exercise fraught with uncertainty. Its decentralized nature, global reach, and disruptive potential make it a force unlike any other in the financial world. However, several factors suggest that Bitcoin's journey is far from over. Technological advancements continue to drive innovation within the Bitcoin ecosystem. The development of the Lightning Network, a second-layer protocol that enables faster and cheaper Bitcoin transactions, has the potential to unlock new use cases for Bitcoin in payments, microtransactions, and machine-to-machine communication. Moreover, Bitcoin's growing acceptance as a legitimate asset class by institutional investors, corporations, and even governments suggests that it is here to stay. Section 8. Making informed decisions, a guide for the perplexed. For those considering investing in Bitcoin, the sheer volume of information, opinions, and advice can be overwhelming. Making informed investment decisions requires a cautious and measured approach, guided by thorough research and a clear understanding of one's own financial goals and risk tolerance. Start by educating yourself about Bitcoin, its underlying technology, and the broader cryptocurrency market. Explore reputable sources of information such as books, articles, educational websites, and online communities. Consider seeking advice from financial advisors who specialize in digital assets. Remember that investing in Bitcoin is not a guaranteed path to riches, but rather a calculated risk with the potential for both rewards and losses. Invest only what you can afford to lose, and be prepared for the volatility that comes with the territory. Section 9. Conclusion. Bitcoin's enduring legacy. Bitcoin, in its relatively short lifespan, has left an indelible mark on the world. It has challenged long-held assumptions about money, finance, and the nature of value itself. Its decentralized and transparent nature has empowered individuals, offering an alternative to traditional financial systems often perceived as opaque and exclusionary. Whether Bitcoin will fulfill its promise as a global currency, a store of value, or a catalyst for a more equitable financial system remains to be seen. However, one thing is certain: Bitcoin's legacy as a technological innovation and a social experiment will continue to shape the future of finance and beyond. As we venture further into the uncharted territory of the digital age, Bitcoin's journey serves as a reminder that the greatest revolutions are often born from the most audacious ideas.